Hello, I'm James and thanks for joining me on Kalkine TV for the ASX buzzing stocks for the day. The Australian share market opened on a negative note. As of the 19th of December, 11:26am Sydney time, the S&P ASX 200 is lower today, dropping 17.7 points or 0.25% to 7,131 points, and in the process setting a new 20-day low. While ASX All Ordinaries was also lower, dropping 15.5 points. On the other hand, the volatility index, the AVIX, was sharply up, gaining 6.48%. As of 11:26am Sydney time, sectors are mixed. 6 of 11 sectors are lower today, along with the S&P ASX 200 index. Consumer staples is the best performing sector, gaining 0.58% and 1.23% for the past 5 days. In today's opening session of trades, the gainers were Evolution Mining, up by 3.6%, and Regis Resources, which saw an increase of 3.51%. On the other hand, the decliners were Star Entertainment Group, down by 8.53%, and Block Incorporated, down by 2.92%. Technology-driven payments company Sezzle Incorporated today provided the market with an update on key financial metrics for the month ending on the 30th of November 2022. The company said that total income increased 6.5% year-on-year and 16.3% month-on-month to hit $13.3 million, reaching a new high as a percentage of underlying merchant sales of 8.1%. For November, the company reported net income of $0.2 million compared to an average monthly net loss of $8.6 million in the fourth quarter of 2021. Meanwhile, the company's adjusted EBITDA remained positive to the tune of $1.5 million compared to an average monthly adjusted EBITDA of negative $8.2 million in the fourth quarter of 2021. Commenting on the results, Charlie Youakim, Sezzle's chairman and CEO, said for November that they posted a new high in total revenue, which drove positive results in net income and adjusted EBITDA. He also added that they looked forward to continuing to grow their top and bottom lines for 2023. Sezzle shares traded at 53 cents, up by 3.92% as of 11:34am Sydney time. Moving on, and Aussie mining services company Perenti today provided an operational update and an upgrade to its financial year 2023 guidance. The company said that the positive momentum noted in the operational update released on the 14th of November has continued as it heads towards the end of the calendar year, with this momentum expected to move into 2023. Since the release of the most recent operational update, Perenti has secured improvements to commercial conditions across several Australian and African projects, including retrospective rate adjustments in relation to work that was previously completed. With improved commercial conditions and in consideration of securing work at Ernest Henry and scope growth at Garden Well, the company now forecasts that the company's financial year 2023 revenue will be somewhere between $2.7 billion and $2.9 billion, and EBITDA will be between $230 million and $250 million. Meanwhile, net capital expenditure remains unchanged at $340 million. Perenti shares traded at $1.17, up by 7.6% as of 11:35am Sydney time. And lastly, Synlait Milk has reduced its forecast base milk price for the 2022 and 23 season to $9 per kilogram of milk solids from $9.50 per kilogram of milk solids. The company said that the revised forecast reflects weaker global demand since September 2022. Demand has weakened as the cost of living increases globally and economic activity in China remains suppressed due to COVID-19 restrictions. Commenting on the update, Synlait CEO Grant Watson, said that based on softer dairy commodity prices across the first half of the 22 and 23 season and the remainder of the outlook for the season itself, they believe that it's appropriate to lower their forecast base milk price to $9 per kilogram of milk solids. Synlait Milk shares traded at $3.45 as of 11:39am Australian Eastern Daylight Savings Time. Alright, that's all for this edition of the ASX Buzzing Stocks for the day. Another episode is coming your way tomorrow, but until then, make sure to keep it locked here on Kalkine TV for the latest market insights and business news. I'm James, signing off for now.